Welcome back, everybody, to Volatility Trading Strategies, and this part 2 of the Volatility Lingo series. Now, in part 1, we talked about contango. If you missed it, there's a link here, but in that one, I showed how contango correlates to periods of stable markets, and under the right conditions, potentially a time when traders would want to consider going short volatility. So the flip side to that coin, backwardation, is what we're going to talk about today. What it means, how often it happens, for all of those who think a market crash is around the corner. Backwardation might be an indication of when those bearish market positions would start to make a little more sense. So give the video a like for me, and if you do want more specific help with your investing, if you want to see my exact portfolio and all the trade signals I send out every day, there's a no obligation free trial on my website you can claim anytime. You're always welcome. So today let's answer the question of what is backwardation? Alright, so just to be consistent with the first video about contango, this is the same VIX futures term structure for August 4th, 2021. Now, side note, this is a good website to bookmark. It's called vixcentral.com. You can check it every day for the most up-to-date values. Now, as a very quick recap, all of these points represent monthly VIX futures contracts. Month 1 here, called M1, is for August. Month 2, M2, is for September, all the way out to next April. Traders can buy and sell these futures freely, essentially to speculate on where they think volatility will be at a future date. Now, contango is very simple. It's just when this M2 contract is trading at a price above the M1 contract. That's really it. When M2 is greater than M1, we call that contango. And remember, backwardation, the subject of today's video, is the opposite of that. It's when that M1 future is above the M2 future. That's called backwardation. Doesn't happen as often, and as alluded to before, it is typically reserved for periods of elevated market risk. Every time the markets are crashing, there's a very good chance the VIX futures term structure is in pretty steep backwardation. Now, this is an extreme example, but this is the term structure for March 16th, 2020, right at the heart of the global pandemic. We can see the M1 VIX futures contract is trading at a price of 72.625, and the M2 VIX futures contract is 59.15. Since we've now got M1 trading above M2, this is called backwardation. Now, full backwardation would be when every single VIX future is trading higher than the one further out in time. That's what we see here on this day when the markets were crashing. But since most of you watching this video are very likely interested in volatility ETPs like VXX, uvxy, SVXY, etc., those ETPs trade with a set methodology that only factors in the changing values of the front 2-month VIX futures, M1 and M2. None of the other ones matter. We typically only care about the relationship with these two and how they converge to the spot VIX index at expiration. So when you're following your favorite volatility traders on Twitter or reading their blogs, whenever they reference contango and backwardation, they're almost certainly only talking about the relationship of these front 2 futures. And if we plot this M1-M2 relationship on a chart, it looks like this. All values above this 0% line is when the M2 VIX future is greater than the M1 VIX future, and we call that contango. All values below the 0% line is when M1 is trading above M2, and this is called backwardation. As I mentioned, loosely speaking, contango is most often seen during periods of stability, and periods of backwardation are when market volatility is elevated and market participants perceive some forward risk. Statistically speaking, the median, which is the dead center average value of all M1, M2 data going back to inception, is 6.38%. And these VIX futures align themselves in contango 83.78% of trading days. That means backwardation only happens on 16.22% of trading days. Not that often, but when it does happen, it's very important to have a trading plan because it probably means the markets are unstable and highly risky. Just to give you some visuals of some of the more recent market crashes, this first one is a chart of the S&P 500 in 2020, the year of the global pandemic. The VIX futures first went into backwardation on February 24th, 2020, which is right there. They remained in backwardation for 52 straight days and then exited back into contango on May 6th, 2020, which is right there. You can draw your own conclusions on this and what it might mean for your future trading. This here is a chart for the market crash that took place in Q4 2018. I know it was a little while ago, but remember, from October to December 2018, the S&P 500 crashed over 20%. Now, the first sign of VIX futures backwardation was on October 9th right there. And this first streak lasted until November 7th right here. It did chop around for a few weeks after that, being in both shallow backwardation and contango, and then it dipped back into strong backwardation again on December 4th. And this time it lasted until January 7th right there. Again, up to you to conclude what this means, but you may start to see a pattern here. This last one will perhaps go down as one of the most memorable market crashes in history, at least for all of us VXX and uvxy traders. Volpocalypse or Volmageddon. You can choose the natural disaster that sounds cooler to you, but February 5th, 2018 was the single largest VIX index spike since Black Monday in October 1987. On that day right there, February 5th, 2018, the VIX index spiked 115.6% in a single day, and it led to the termination of our old favorite volatility ETP called XIV. Now, would it surprise you to know that the VIX futures dipped into backwardation right there on February 2nd, 2018, and they remained in backwardation right through February 23rd right here. Depending on how a person reacts to the market when we see VIX futures dip negative into backwardation, the investing outcomes could have been dramatically different. Just remember, the VIX futures term structure was in backwardation the Friday before Volpocalypse happened. It would have been pretty hard to justify a short volatility position, given the VIX futures were already well into backwardation at over -4%. So just to recap for everybody, VIX futures backwardation is when that M1 VIX future is trading above the M2 VIX future. That's backwardation. M1, M2 VIX futures backwardation occurs on roughly 16% of trading days, and like I said, it is only reserved for periods of elevated market risk. Keep that one in mind as you're trying to navigate these unruly markets. Again, if you want more specific trade signals every day, and to track either our conservative or aggressive portfolios that have avoided every market crash since I launched VTS in 2012, you can claim your free trial on my website and join the VTS community. You may just find that it's suitable for your long-term investing goals. See you next time. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.